Well, good afternoon, everybody. I'm Ben Kingsley, and this is Connor Christie, who's one of our product managers here at Moorr. And we're delighted today to be talking to you about our MyPROPERTY pillar inside the Moorr platform. Now, a little bit of a backstory for those of you who don't know, but effectively, we do have an advisory business, and we've helped thousands of clients over the years build out a property portfolio. And so the Moorr platform's origin story started with that advisory business. And we just thought it's such a great tool that why don't we also let the general public have access to it to help manage and also do their bookkeeping and all of the other things associated with managing their property portfolio. So that's a little bit of a backstory. We're here to talk about the MyPROPERTY pillar. And this pillar is obviously dear to my heart because as an avid property investor, this is the platform that I use to manage my portfolio of properties. So what I wanted to talk about today in terms of this agenda and what Connor and I are going to cover off on is we'll be introducing you to what MyPROPERTY is and giving you a broader sense of that story. Then we're going to show, Connor's going to show us a live demo of some of the features and insights that we can get from the new portfolio view. And then I want to talk to some of the actionable insights. So it's great to get insights, but it's also more powerful to know, okay, with that data, what can I do with it? And then we're going to open the floor to questions. So if you've got any questions, please feel free to put those questions in the live chat, and we'll do our best to get to those questions at the end of this webinar. All right, so let's talk to what Moorr is. So the vision of Moorr is going to be Australia's #1 property platform. But managing your property portfolios and just managing your household affairs doesn't just rely on property itself. At the end of the day, property is a vehicle for what we think about in terms of lifestyle by design. So we want to understand what your personal goals are, what you're trying to achieve, and help you achieve not only your next goal, but ultimate goals, both personally and also financially. So we call that the lifestyle pillar. So that's built into the My Goals section of the platform. Then we have the money pillar. So at the end of the day, you can't do this without having those cash flows and that analysis around the money to be able to buy and hold those properties as well. So we have lots of different tools and features around how you can better manage your money, trap that surplus and put your money to work. Obviously, the one we're focusing on today is the property pillar. And so when we are talking about MyPROPERTY, we are talking about rich insights from a balance sheet point of view, but also from a P&L, so profit and loss point of view, as part of that particular story. So we're going to unpack a few of those things today. And then finally, it all comes together in terms of that wealth position and having that financial security, like most Australian households want. That is a big part of bringing the 4 pillars of the Moorr platform together to allow you to obviously create that future success and at the end of the day, the freedom of time, the freedom of opportunity to be able to do the things that bring great joy to you and your family. So that is sort of how it links in. So we've got all of these moving parts and elements and tools and features. But at the end of the day, it's about this journey. It's about making sure that all of the decisions that we're making have some meaning, some impact, some purpose as we tick off those big milestones in life. And so, you know, from my point of view, the passion for me is helping you achieve the next goal, and then the next goal, and then the next goal, and then ultimately, you know, plan to become what you plan to become. All right, so under the MyPROPERTY, this is what I plan to talk about. This is where you store, you track, you record keep, and you manage your portfolio of properties. So at the end of the day, you are in the business of running private rental accommodation, and there are also some consequences and some reporting that we need to do to the ATO as part of that. So not only do we want to get the performance and the understanding of that, but we also need to have those records kept for future capital gains, to also make sure we're declaring all of our expenditure and our costs and our income associated with each of our investment properties. So for me, that is the single home for all of that particular information. You can see there, you know, income, expenditures, capital gains, those projections, and we aren't done yet. We've got a beautiful roadmap in terms of what we're trying to do. Now, I also want to remind people that the platform is built in both mobile and also the web app. And the best way I like to describe it is mobile is all about your money on the go. So when we start to introduce soon transactions and then bank feeds, that'll be really, the place that you check in on those broader ideas, but also track snap receipts and documents and so forth and ingest them into the platform. But where you potentially do some of the more detailed and richer analysis, where we've got I suppose, a bigger canvas to do more of the charting and more the analysis work, as opposed to just a small phone window, that's where you'd go to the desktop or web app version of the platform. All right, the other critical thing that we need for you to understand, and this is for beginners who are starting out, is the financial card. So the money management piece is the core, and we call that My Financials. And underneath that is our financial cards. So today we're going to be focusing in on the property asset cards, and in particular, the property investment card. So this is what it will look like in both web or mobile versions, where you'll be able to name the card. It'll have a clear indication in terms of what type of asset card it is, which is property in this particular case. And we've also thrown in a little bit of the income story on there. Now, to buy a property, usually most of us have to borrow some money.
Unfortunately, yes.
Yes, we do. So the first thing we've got to be thinking about is connecting the borrowings to the asset card. So we can have obviously one loan split, we can have multiple loan splits. All of those have a relationship back to the asset card. Of course, our investment property should be delivering us rent. And so that's the money coming in. Now, when we get that money coming in, we're going to record that. We need to record it somewhere. And so we record that in a bank account. And so we have the offset account, and we've taught many people before about the benefits of the primary account and making sure that your primary offset account is linked to your non-deductible owner-occupied debt. I won't go there. That's a story for another day, but you can see basically what's happening. And finally, obviously, when you're running a business, you've got expenses. So what we're looking at there is obviously, sorry, I just should have said that the offset account card connects in against potentially this loan account or one of the loan accounts. So you can set up those linkages once you build out those cards. And then finally, you've got your investment expense cards. So we've got the full list of those expense cards, which we will show you shortly as part of our demo, but that just gives you the thing. So that's still part of the money out. Where is that money coming from? Well, it's coming from the bank account to pay those expenses. So if you understand the fundamentals around financial cards, you're going to be really well placed to understand just how simple and easy it is to run your finances on Moorr. All right, which then leads us in, we wanted to get straight into the portfolio view. So Connor, in terms of the decision to build the portfolio view, why was it that that this is the next big feature that we've released on Moorr?
Yeah, so definitely. Thank you, Ben. To give a bit of context about myself and I guess the vision for Portfolio View, prior to working on Moorr, I worked within our strategy, our property planning team at Empower Wealth. So a lot of the vision and insights that I put into the Portfolio View was based on feedback of developing over 1,000 plans for our clients, myself, and the broader team as well. So the Portfolio View is the first feature of MyPROPERTY that will continue to see further development, enhancements on the back of feedback of our clients and of course of you as users. So really the insights for Portfolio View is based on that experience professionally and also ourselves as property investors as well, a bit selfishly, what we want to see in a platform to manage our properties as well. So I'll talk through some of the key features around Portfolio View. First of all, I guess the golden feature here is around the portfolio position here. So this allows us to see our equity position over time based on when you bought certain properties, the loan balances at that time, and the value of your properties as well. This can be seen by a different breakdown of your owner-occupied property, the different investment properties you have, and the business assets as well. So we can see different combinations of our portfolio view there based on the value of the properties, any loans you have associated with those properties, and then your net position. We have some sort of key metrics at the top as well relating to those properties. We'll adjust to the properties you select. We then have a loan breakdown. So this page, you can really think of a central point to see all of your investment properties. And we have a key metrics here around the total balance, the current LVR or loan to value ratio, your equity at 80%, and your loan repayments. This can be selected here through your security and purpose. You may see here that the available equity and the LVR here don't actually change for the purpose or security. And that's by design, because security is really the point of view of the banks and how they view your lending position. Purpose we think of more from a tax point of view, but when we're looking at security, we want to see the available equity we have for additional lending, the opportunity to invest in further investment properties. We then see the different loans we have associated with the property. Again, that will depend on the purpose or the security. If, say, you take an equity release out of the home for another investment property and so forth. And we will then see the linked offset accounts to that loan and that property. We then have a feature that you may have seen on other areas of the platform, which is the cash flow projection table. Now, previously, this was done in isolation of just that one investment property. We now have the ability to see an aggregate of the properties that you select in the selection widget up the top here. So if we choose, say, one investment property, then we'll just have the information for that one. But if you choose, say, 2, 3, or 4, that will update based on the income and expenses for all of those properties that you've selected there. So just one thing, I do constantly look and review all of the feedback coming in for this feature and more broadly. So feel free, as you're using this, to put through any suggestions, any feedback, and I'll review and look to implement that. And some feedback already coming through, which has been great to see. I'm actually working with the developers at the moment to make sure that's implemented as well. So we do act as quickly as possible on those feedback points. So thank you very much.
Thanks, Connor. So if you're someone, have you, those who are joining along, have you already checked it out yet? If you have, let us know in the chat in terms of how you're finding it. And of course, in terms of if you've got any questions for later in this webinar, please start to put them into the viewer chat window as well. So thanks, Connor, in terms of giving us that broader overview. What I'm going to do now is, basically talk to a couple of critical things that will just teach people the power of the financial cards and all of the information that we're gathering in behind that. And the best way to do that is to, you can see here that this property was acquired. So investment property 1 was acquired at this particular time. And if I just click on one button here, you can see that's the first record, and that's in the historical log. And so that's basically said, okay, the first record I've got of that property was it being purchased for 400,000. So there it is sitting there. And then each time I come in, which might be for properties, you might want to revalue them every 3 or 6 months or whatever, you can see that this particular user, this demo user, has put these changes in over time. And then you can see the second property coming in, and then also some of those changes over time. So that is a great way in terms of how you understand. So if I go back now into looking at how that works, is I can then potentially see that investment property here. And you can see here in terms of the value, if I go into that log, there's the log. So it was 480,000, sorry, my bad, my eyes. And you can see the changes that have happened over that time. And on each of the critical things, such as the purchase amount, the time you purchased it, the ownership splits, and potentially the income and also the expense cards, is we are recording all of those transactions in those logs. So you can come in here, you can add a historical log as part of that. So this is what we've been talking about in terms of getting rid of old spreadsheets and having the one single home. You can grab all of that old historical data and you can put all of those inside Moorr. So you're not waiting for your portfolio view to be from today. You can actually put all of that rich data in. And that's consistent with obviously all the different types of expense cards, from income, expenditure, and borrowings as part of that. So I just think that that's a really important lesson for people to understand. Oh, okay, well, I'm not going to just track it from now. I'm going to have all of that historical information. So if you're putting in the purchase price and then the rough idea of the loans you had at that particular time, all of that will then start to track. Now, we promised you when we're looking at this type of things, we said, but what are the actionable insights? So what does a professional person and a team of professionals, if I was advising someone who presented me with this particular scenario and their overall portfolio, what is it that I'm going to be looking for in terms of understanding where a client might have a potential opportunity? So I'm going to do an equity assessment straight away. Now, the first way in which I'm looking at that, and it's a pretty healthy equity position because effectively net position is overall equity, but the banks will tend to only lend to 80% unless you want to go into mortgage insurance territory. But I can also see through the lending breakdown that I've got a nice little understanding of each security and what might be available against that security at an 80% LVR. And that's all taken from the value of the property at that particular time. In addition to that, I can also go into the home dashboard and I can see a nice summary of that where it's not only incorporating the investment property equity, but I've also got a lot of equity in my family home. And so overall, this particular household had around 691,000 of available equity. Now, what does that mean in terms of, have we got lazy equity? Well, that depends in terms of where you are on your wealth accumulation journey. If you are still in accumulation phase, then naturally we've got a lot of lazy equity there and there's potential for an opportunity to maybe do some further investing. But if you're, let's say, my age and you've already got your portfolio built, paying down that debt is going to be an important part of what that particular story looks like. So it really is important to understand the benefits of equity as part of that particular story. So what I'm going to do now is just unpack that story for you. So there's the three properties. That equity assessment that we've just done is to get that valuable data out. We need to know your values and also the debt exposures. What we would consider as being healthy equity, so enough equity to potentially look over the fence to see if there's any investment opportunities. A rough idea is around 80,000 in available equity at an 80% LVR. Obviously, you can use savings as well for those people who are playing along at home. But it is really important to understand that that's the situation that we're talking about. Now, at the end of the day, the real equity that you've got is what the bank says is the valuation of your property. And a lot of banks will use independent valuers, but those independent valuers are also human beings, and sometimes they make different assessments. So that's why using a mortgage broker to get that valuations could be a way in which you could potentially release that equity if you are in that accumulation phase. So step number one for this particular couple, I've now seen that they've got obviously ample equity if they wanted to continue to build out that portfolio. But equity is just not enough. A lot of people make the mistake to think, well, I've got all this equity. Why won't a bank lend me the money? Well, these days we've got responsible lending obligations. And so we need to look at the income as part of what we would do in terms of, lending people money. So we need to know what the surplus cash flow is for this particular household. So let's go back into the platform. And we can see here in the summary page, I can get a really rich understanding quickly of household income, which includes the rental portfolio. I can also see the tax that I'm paying, the annual surplus that I've got, the cash savings that I've got, again, that total equity at 100%, and then also the total equity at the 80% level. And then I've got a breakdown in terms of Sam's got 105,000 of household income and Sammy has got 90,000, and I can see the surplus money that's coming through, and that's going to be forming part of the available money that I have to do a lending assessment or a borrowing power assessment as part of that. Let's go back into MyPROPERTY because we wanted to use the portfolio view as part of that particular story. And so we go down here and we have a look at the portfolio cash flow projection. Now, I did quickly see, just as a side note here, Connor, for this particular household, I got $45,000 against my family at home offset, but I've got this 25,000 saving buffer against 8 Parkin Street. That shouldn't be in there. That money, like, this is a way in which we can save against our non-deductible debt, because we've still got a balance against our owner-occupied home. So that money should be parked in there. So there's one quick way in terms of making your money work harder for you. But I did notice that before. But the one that I want to show you is how can I potentially improve my cash flow position? Because what you can see from here is that pre-tax, it's costing $15,000 of out-of-pocket money to basically support this portfolio. Now, that has been factored in to the overall number here. So this additional 35 is over and above that, but it's been factored in here in terms of what I'm looking at, right? But how can I improve that? Well, one of the ways in which you can improve that is go into your property card. So by way of example, let's have a look at this particular property card, and I'm going to take a quick look to see when this particular client had last reviewed their rents. So at the moment, the budgeted rent that they're expecting is $525 a week, but I can see that they haven't looked at increasing their rents since 2023. So we have a rental analysis tool in here that does a radius analysis. So let me jump in here. So it's now gone off. It's running the algorithms and it's assessing comparable properties in the same 500 meter to a kilometre radius. And it's given us a rental appraisal. And it's telling us that we've got rent here of $566 a week. So we're at $525. So I want to start talking to my property manager about increasing the rent. Now, there's a couple of reasons why I might want to do that. The first one is I might have a great tenant who's enjoying safe and quiet enjoyment of property. So I may not necessarily want to increase it by that full amount, but I think $25 a week, given obviously I might have other compliance costs or extra higher land taxes or those type of things, it needs to be fair. At the end of the day, I am running a business in terms of what this looks like. So off the back of that, what I'm going to do is I'm going to go back into the property details and I'm going to change this amount. So I'm going to now have $550, and you can see it's now going to save that value at this current date. And so now if I go to the historical log, there is my current figure. So I'm now, after speaking with the property manager, we've done a rental review, and you can only do them in most states and territories now every 12 months. So we fall into that category comfortably. And so we've now announced that rental increase for those tenants. We then go back into MyPROPERTY, and of course, I now need to make sure that that calculation carries through. So I go up here into the portfolio view window and I just reassess that does the calculations. And all of a sudden now I've been able to reduce the amount of cost coming out, and that's improved my surplus cash flow. So let's quickly summarize that in terms of what I just did. Before the cash flow, or looking to improve my cash flow, I've now got the ability to review that rent, and now I've adjusted that, and I've now got surplus or higher overall cash flow. That's going to improve my borrowing power. Now, rough numbers around $1,300 a week is, sorry, a year. I'll get that right, a year over that time. So that is another example of how you use these insights to take action, because an insight by itself and knowing the performance over time is healthy, but it is also about sort of saying what further can we do to get the benefit out of the Moorr platform. All right, so thank you for allowing us to give you a couple of actionable insights off the back of that. What we want to do now is go to a couple of questions in terms of those cash flow, a couple of questions. First one I've just seen there from John is how is the cash flow projection calculated? So if we go back in again inside here, what we can see is we're seeing, and let's just bring up one property as an example. So we'll take out that family home and we'll just bring up investment property too, because that's the one we've been focusing in on. And so we can see we've just got, again, it's a demo account, right? But we've got council rates, we've got management fees, we've got property insurances, and we've got the loan repayments, and that's our total. Now, to find a quick way in which I like to find that information is I go into the asset card and I can see obviously all of those different expenses and income levels here as part of that. Now, if I wanted to add, I've got a quick add button here. which I can then effectively select the expense item. What I like about this is the ATO's exhaustive list in terms of how you put this together. And so when you want to record the right item, just pick from this list. Now you can name it. You've got a naming convention ability here in terms of how you name that expense card. So that's how you might be able to refer to it. But we've designed the system to allow for that to happen. Now back to the question, how is those things calculated? Well, the moment that I put that asset value in at that time, it's measuring that 12-month period from a tax point of view. So if it falls within that 12-month period for the annual tax assessment, where I'm getting those cash flow projections, then it'll change those calculations as part of that. So again, that's happening for income, that's happening for expenses, and it's also happening for borrowing. So if the banks pass on the next interest rate cut, that's going to be part of that particular story as well. So John, thank you for your question. That's a very quick way in which we would summarize that. The next question we have here is from Ashley. And is it worth historical tracking previously owned properties or shares? Well, I think it is.
Yeah, definitely.
Yeah. So Connor, tell me why in your mind, why you think it is important that you're seeing this sort of long-term picture of your portfolio.
I think that tracking long-term really gives you the full picture of how your portfolio has performed over time. So it really helps you make further decisions around, should you look at selling property or should you look at adding additional properties to your portfolio, and really helps to track how you performed over the long term, and really think of it as a share investor as well. That there's a lot of the similar aspects of share investing to property, and how you should track performance as well. So it's definitely insightful to track your portfolios like you would your share portfolio over long term, how that's performed, and how you might be able to optimize decisions for the future based on previous experience as well.
Yeah, and I like the fact that sometimes property can just sit there and do nothing. Like I've owned property for 30 years, right? So it can just basically stall and do nothing. But if I have confidence in playing the long game and I can see this change in performance over time, like this portfolio is performing exceptionally well at 1100%. Of course, it's a demo portfolio, right? In terms of what that looks like. We had another question here from Lisa, who also says, how far back can you track that? So not only did Ashley ask, should you add them in there? I think it's important for you to understand what has been the performance of that asset over time, and how you've also managed debt over time. And again, the insights inside Moorr allow you to track cash flows. It allows you to track debt management. It allows you to track all of these other things. So go for gold. If you love your old spreadsheets, or you love seeing change in progress because it also means you're making meaningful impact, I'm a huge fan of that particular story as well. We've got another question here from George. This question's about finance cards, budgeted income. Okay, budgeted, but okay. So budget and expenses. So what George is asking, inside these financial cards, you would have picked up that the card is actually showing on here budgeted and budgeted. So one of the things that's important to understand is that with the current projections that we've got in there, effectively these are all assessments. Even the current value you might have got from a website or something along those lines. So it's not a factual number in terms of that. But what we're trying to do here is say, okay, these are the anticipated values that we get. And shortly, when we introduce transactions onto the Moorr platform, we'll be able to measure actuals versus budgeted. But in terms of, so that's why we make sure we understand that even though these bills might be fixed bills, and we're hoping that the fixed amount is exactly the same as the amount we pay, some other bills might be on a usage basis. So we're making an estimate. So remember, we'll always have projections and estimates, and then we want to track against those once we introduce the ability to bring in the actual values. And so we're excited about when that comes in as well. One final question, because I've realized that we're already at 30 minutes. So time flies when you're having fun. Jason, is there plans to increase the functions of superannuation? Is the plans to increase the capabilities to track that? I have a property in a self-managed super fund. I wanted to track that using this software too. I have 2 properties in my self-managed super fund. And at the moment, I do use an abridged way of using Moorr to track those. How I do that is I take the net position and I put the net position inside the platform to see my overall position. So I am using superannuation to track my overall wealth position and my super position, but I'm not putting the nuance in there because of the tax. The taxing is different inside super versus inside personal names. But if there is a strong demand from our user base who are saying, we want to get more and more of these things in there. Of course, there's a big investment every time we've got to build a whole new section of the platform. So we've just got to make sure that economically it makes sense, because at the moment the platform is free, and we want, at the moment we've got around 9,200 property investors using the platform to track properties in their personal names, and they're tracking around 35,000 properties as part of that as well. So keep those questions coming. We'll probably have to answer those in isolation, but did you want to jump in?
Yeah, I just wanted to say as well, around the ownership, if you did want to keep the self-managed super funds of income and expenses in isolation, you can set the ownership to other as well. So it won't reflect on your personal income and cash flow on the dashboard and so forth as well. So that's an option, particularly if you have trust structures and things like that as well.
Beautiful. So thanks very much for those questions, and sorry we didn't take more on. In terms of, we might be able to come back at the end. If people want to hang around, we might be able to come back at the end. I've just had a note here, said to me that there's lots of great questions coming in. So we will hang around and we'll edit it later. We've got a bit of time. You got a bit of time to hang around. Let's do that. Okay, so if you want to learn more about MyProperty, it's available through /MyProperty on the Moorr website. So go and check that out. We've got some tutorial videos from Connor and myself in terms of why we use it and how we use it. Connor, can you talk to what you're working on next so for everyone's benefit, Connor looks after the property pillar inside Moorr. So tell us some of the other sort of stuff you're thinking about building for our users.
Yeah, of course. So like I said previously, this is something we will continually develop and work on and enhance. So some of the things that I'm looking at including in the future are around tax reporting. So as you've seen, though, a lot of the investment property expenses has recently changed, and that is to enable us to link that to the ATO category. So we'll be able to generate reports, and you'll also be able to see reports around your tax impact as well, so throughout the financial year. We're also looking at including more information around your property management, your tenancy, and your lease history as well, and some upcoming dates around your compliance checks, like smoke alarm detectors and all of those compliance checks that we have to do as landlords as well.
And I see that working really well with one of the other features that I'm pushing for at the moment, which is a monthly activity report.
Yes,
so if I'm getting my monthly activity report and I've got key reminder dates as a summary for myself, then that might trigger me to jump in there. Or to your point, I've got a property inspection due, and so I'm making sure that my property manager is being held accountable as part of that particular story as well. So yeah, 2 big things for me: helping me better in my administration and my bookkeeping and getting my tax affairs in order. That's going to be a real help for Jane and myself. So we're looking forward to when that feature gets released. And of course, the other information that we always think about, where do we store all of the capital cost information and all that? I think that's going to help with also some of those potential estimates around capital gains into the future as well. So I'm excited about those couple of features that are also coming. Let's talk about some of those other features that we have on our roadmap. As I said, the big one is firstly transactions and then bank feeds. So Ulrich's doing a great job working with the team as putting all of that together. So we'll have some announcements hopefully in the next couple of months around manual transactions to start with, but we're building AI categorization engines to allow for ingestion and then also for full open bank feed. So I'm excited about what's happening there. Opti is also being worked on in terms of being able to get some further insights or ask questions about some of your data inside your platform. We see that personal assistant being a big feature. Sankey charts, the monthly activity report I mentioned before. The document management is also a big piece. So again, if it is going to be the one home, then I want to basically be able to put all of my tenancy agreements. I want to put all my rates notices. I want a single home where I can also have that document management solution inside a document vault. So I think that's also, so there's a lot of exciting things that we are planning to build. So, we're making a long-term investment into this platform, and we're thrilled that people are using it in their tens of thousands already. But again, this will be, what I would consider for aspiring Australians, this is the platform to use to help you achieve your next personal or financial goal. So thank you again. I did promise that we'll do a couple of other questions. There is a question here from David. Is there any plan to calculate LVRs and show the different results based on both security and purpose?
Yeah, it's a good question. I think that there's certainly merit for having the equity position based on purpose and security. But typically with the LVR, it is based on security because of the sort of lending point of view rather than a tax component there. So we would probably keep LVR as security based, but I definitely think there is merit to having the equity based on, especially if you do want to look at, say, restructuring and so forth with your mortgage broker, having equity for your purpose and security, particularly around the equity releases you might have done previously. Then we could look at restructuring that against different properties and so forth as well. So yeah, very good question there.
Okay, and there's another question here from Brian around MoneySMARTS to support debt recycling and tracking. So once transactions is introduced, which is allowing us to then do the actual, the whole world opens up into a completely different game-changing position for the platform. So effectively, you will be able to do almost real-time cash flow management if you want to. Now that would, with bank feeds and this types of investment, that is going to mean that there is going to be a greater cost for us for running that platform. So if you are thinking about bank feeds versus manual transactions, we will definitely be introducing a subscription for some of those bank feeds and some of those dynamic insights and potentially the AI assistant, because our costs do get quite considerable. Coming back to the other question, I think it was also Brian who might have asked, if Moorr is free, how do you make the money on the product?
Good question.
It's a great question. I think it's a fair question. And so, as I said, because we have thousands of our own clients through our business, they are obviously using this platform. So it's their client portal, our Empower Wealth Business client portal. So we are building it for them and for those thousands of customers that we look after on a week-to-week, month-to-month, year-to-year basis. And so they get free access to this platform. But of course, people can also inquire about those services and they become sometimes clients of ours as well. So we are doing that. We have, as you know, we have no advertising on the platform, and we have no aspirations of having a blanket advertising on there, but we do certainly think that to support people who are managing their properties or managing their investments, there might be a marketplace, for depreciation schedules, for building and pest inspections and those types of things. So what we want to try and do is align it to, those types of services. Now, if they are being promoted on the platform, there may be some type of commercial arrangement that we have with them. But at the moment, we're interested in just basically keeping MoneySMARTS and what you see today free forever. And as we build out more and more capability, and we get those customers, and there's an external cost rather than our own internal cost in terms of implementing that, then yes, you could expect to see a subscription model coming into play. Certainly for tax reporting and all of that, where it's saving you time and managing your portfolio, there might be also a bundle type package up is what we're thinking about from that point of view. So yep, that's basically our intentions in terms of what we plan to do with the platform moving forward. There's one final question here I'm seeing just come through, and this is from Alan. Can you please explain where to add historical data in the historical log? Okay, great question, and that's pretty easily answered. So let's jump into it. So depending on which card you go into, so inside financial, in the financial cards, there is different places where you can add those logs. So as an example, let's use an expense card in this case. So I'm going to say, okay, my internet. So if I go into internet and my internet fee has gone up, you can see there is the budgeted internet amount. And because this is a fixed cost, there's no real discretionary. So we've always said that that's an essential cost. So if I wanted to change that, I can simply click on the edit button here, which will allow me to change it, or I can go into the log itself. Now it's because I've clicked on it, it's said that I've got to change it. So let's say that's gone up to $99 a month, $99.99. So that has saved with this little tick button down the bottom here. And if I want to have a look in the financial log, there it is here. But you can also bring up that under your financial log. So if I wanted to add a value in here, this is the quicker way, in my opinion, is to go into the log and you can put all those historical dates in there and that will adjust for that. So that's potentially how you do it. Now, of course, I'm going to take that one out that I just added. So I've clicked the delete button and then I've confirmed it by clicking the tick box. But Alan, you've also put me in, and for those people who've hung around for this last bit of gold, I know this wasn't meant to be in the prezzo, but this is also one of the other things I absolutely love about the platform, especially when you start to see all of your logs associated with that. So inside the wealth tracker, you've got also your net worth breakdown. So that just gives you a nice little summary in terms of what those breakdowns are looking like. Okay. But if you go back into the wealth tracker, check this out. What you're able to do is you can select your period. So let's say I want to do 3 years. Okay. So I've done that. And if I click on this, I've got all of my cards that make up those calculations. And I can go straight into those cards in terms of looking at the logs and seeing those change balances. So if I go in here, again, I'm going to see quite a lot in this log because that's the original price I paid for the property. So that to me, I like that little feature in terms of what we're building in the background, that when I'm hovering over that, I get to see all of those particular cards. There is obviously other bulk add, bulk edit features that are built into the platform. And we encourage you to go to the Moorr website to look at those tutorial videos or stay on this YouTube channel and look at those tutorial videos on the YouTube channel as well. So thanks very much. If you've obviously enjoyed what we've done here today and you are on the YouTube channel, please subscribe. That'll give you notifications of any of the new videos, whether they're training videos or any of the new releases that are coming up as well as part of the Moorr platform. So again, we've built Moorr to help you achieve more with this particular platform. If this is new to you, you can grab this QR code with your mobile phone and you can start loading all your data into the mobile phone and then jump over to the web app and get started in looking at your portfolio view. But thanks, Connor.
Thank you very much
for joining us. And thank you everyone for your time. We appreciate it. Always remember, knowledge is empowering, but only if you act on it. Bye for now.